Hello everyone, my name is Dan and I have a very exciting video for you all because in this one I will share with you a supply and demand trading secret that will help you pass your FTMO challenge. So if you're ready, let's get right into it. Alright, so we already know how effective supply and demand trading can be. In the past, I've made a video covering the basics, how we can identify supply and demand levels. But don't worry, if you haven't watched that video, I will quickly go over it right now. So make sure you are focused, okay? So very simple, when price is in a uptrend, okay, it moves in a series of higher highs and higher lows, and the price is constantly breaking highs and going higher, okay? In this scenario, we would look for demand levels. What are the demand levels? The demand levels are essentially the points of origin where price accumulated some bullish strength before it moved to the upside, breaking the most recent high, okay? And these right here will be the demand levels. And in the opposite, when price is in a downtrend, price will move in a series of lower lows and lower highs and lower lows, okay? We would then look for supply levels. The supply levels are the points of origin where price accumulated some bearish strength before it pushed lower and broke the most recent low, okay? And don't worry, we will get into some chart examples in a minute, okay? So this is a very basic explanation of supply and demand. But like I said, don't worry, we will hop on the charts in a minute. So what do I mean by secret? What do I mean by secret? I'm here to tell you that not every supply and demand zones are created equal, okay? And I will explain exactly what I mean by that right now. So let's look at this NAS 100 chart right here. Okay, so essentially we could look right here. We could have this example right here in the market. Okay, so we have a high right here. I'm just picturing an example, okay? It's nothing really about this this price action. Nothing really important happened here, okay? So in this example right here, check this out. We have a intraday high, we created a higher low, and then we created a higher high because we broke this structure, okay? So then we would look at the point of origin. The point of origin would be the last bearish candle before this aggressive push to the upside. And this would be a valid demand level, okay? This would be a valid demand level. But I'm here to tell you that, in my opinion, there's another thing you should look for in order to have the best Confluence demand or supply level. So if we zoom in right here, we would see that there is no imbalance on this demand level. Yes, it is a valid demand level, but it has no imbalance, okay? All these wicks right here are overlapping. The high of this candle, the high of this candle wick is overlapping with the low of the third candle wick. Okay, so because of that, there's no imbalance. And for me, yes, this is a valid demand level, but I wouldn't personally use it. Instead, let me show you an example of a demand level that has all the confluences. Okay, and I will actually use an example. I'm going to use this trade that I actually took yesterday. In fact, this was the trade that was sent in my SMC trading group. I will attach a picture right now to see exactly when the trade was sent. I think it was sent around this time right here. Yeah, if I'm not mistaken, I think this is when I sent the trade. And I will explain you exactly why I took it. And I'm going to show you the difference between this demand level and this random demand level that I choose right here. Okay, both of them are valid, but let me tell you why this one, in my opinion, is better. Okay, and of course, before I do that, if you want to see the trades I am taking every single day, just go ahead and join my SMC trading group. It is the first link down below. Click it and feel free to check it out. So right here again, we have a intraday uptrend. Okay, we are constantly breaking highs. We are on the M15, And from market structure, we know that we move in a series of higher highs, higher lows, and higher highs. Okay, so after we know that, we will then look for a demand level. We would then look for a demand level, and in this case, we have a demand level right here. Why? Because this doji candle was the last bearish candle before this aggressive push to the upside. And guess what happened? Guess what happened? We also have imbalance. Okay, if we zoom in very closely, we would see that the high of this doji candle doesn't overlap with the low of the third candle. So we have a very clear imbalance. For me, this is a demand level I would take. Okay, I am not taking every single demand level or supply level, and that's exactly why I said that not every single supply and demand level is created equally. In my opinion, these levels that also have imbalance show me a higher strength, a higher confluence. Of course, disclaimer, this doesn't mean that every single demand or supply level with imbalance will be a winner. Not at all. Not at all. Okay, you will still have losers. But in my opinion, from the past experiences I had and from all the hours I've spent in front of the charts, I realized that these zones have a higher confluence. And that's why I only stick to these demand or supply levels. Even though, like I said, this random example that I picked right here was also valid. Let me quickly find it. This one right here was also a valid demand level, right? It was a point of origin, okay, where the bulls accumulated before moving aggressively to the upside, breaking structure right here, okay? But because it left no imbalance behind, I just didn't consider it. And that's the secret. That is the secret behind this supply and demand trading method. Always look for imbalance. That, of course, that's my opinion. Now, you could go ahead and just take every single supply and demand level you see. All right. And now let's see how this trade played out. This trade that was sent in the SMC group. Let's play the price and see what happened. And okay, instant reaction to the zone. And then all take profits were smashed. Okay. So this demand level right here was very, very efficient. Oh, and of course, I will now attach a picture on the screen to show you exactly when this trade was updated, when the targets were smashed. And yeah, this is just one example of what I would call a valid demand level. Now, let's just mark up a supply example. Okay, let's just mark up a supply example. So right here, okay, we can see that we are now in a intraday bearish trend. Okay, we can use the path and we can draw a bit. So we have a low, a lower high, a lower low, a lower high, and a lower low. So we are intraday bearish. Now, this means that we would look for supply levels. And we have a very valid supply level right here. Okay, so from this point, price went very aggressively to the downside, breaking multiple levels of structure. It broke this low right here, and then it broke this swing low right here as well. Okay, so great confluence. And one more thing I am looking at. I also like to see aggressive breaks of structure. When I am picking a supply or demand level, I always like to look for aggressive breaks of structure because yes, essentially price could also move like this in an uptrend, right? Have a very long consolidation and then a very slow push to the upside breaking structure. If I see this, I might not consider the demand level. If I don't see a clear aggressive break of structure like we have here or like we had here in this example, okay, if I don't see a healthy aggressive break of structure, I'm not going to consider that specific supply or demand level. Again, this is another secret, I would say, because it's very simple to identify supply and demand levels, right? Everyone can do that. But like I said, not all of them are created equal. And in this case, it pretty much respects everything. Okay, we are in a downtrend. We had a very healthy aggressive break of structure to the downside. Okay, you can see the impulsiveness of these bearish candles. So that's a great confluence. And lastly, we also have imbalance. Okay, if we zoom in closely, we would see that this candle low of this bullish candle doesn't overlap with the third candle high. So there is a clear imbalance between these two candles, and this for me is a valid supply level. Okay. So I think I'll go over one more example. Again, this would be a trade that also was sent in the SMC trading group, but this one was on gold. So let's quickly go over this one as well. Oh, sorry. So this one is a demand level, a demand example. Okay, so this trade, I think it was sent around on Wednesday. I'm pretty sure I've sent it on Wednesday. I think this is when I've sent the trade in the SMC group. Yeah, around this time. And of course, I will attach a picture on the chart right now to see exactly when the trade was sent, the pending order, the buy limit. And now let's discuss about it. Okay, so right from the get-go, we have a bullish intraday price action. Okay, you don't need to worry about this this zone right here. It's irrelevant. But we have a bullish market structure, okay? We can also use the line chart if we find it hard to see it. And check this out, super clear, okay? We have a high, a higher low, a higher high, a higher low, and a higher high. Okay, so we would look for demand levels. Now we can go back to the candlestick chart and boom, check this out. Right here we have a very valid demand level. Why? Because this was the last bearish candle before this aggressive push to the upside. Okay, you can see what a aggressive bullish momentum we had here. And again, this is what I like to see. And it broke this high right here. Okay, so this for me, it pretty much ticked all the boxes, right? All the confluences. We had a aggressive break of structure. We are in a uptrend, okay? And this demand level also has imbalance. If we zoom in closely, the high of this bearish candle doesn't overlap with the low of this third candle. So because of that, this is a valid demand level for me. And then if we play the price forward, we can see that this was another beautiful reaction. Target one was smashed right there. And then currently, I think it's running around TP2, okay? Yeah, take profit number 2 was also smashed, and this is the current time, the present, okay? So yeah, this was another example of a valid demand level, all right? So yeah, on that note, this was pretty much everything I wanted to cover in this video, and I really hope it was valuable. If it was, please let me know down below. A feedback would be very much appreciated. And of course, if you like what you see, make sure you are subscribed to not miss out on future content like this. And feel free to share and like the video if you enjoyed it. And till next time, a very cool video will pop on the screen right now. A super in-depth SMC trading strategy. You should go ahead and check it out and let me know what you think of it. So yeah, that's about it. I wish you all the best and see you next time. Take care.